Hey there, real estate investors. Your accountant told you to just depreciate over 27.5 years. That is the slowest way to build wealth. I'm about to show you a faster, legal way to accelerate your deductions. I've worked with hundreds of high net worth investors who use cost segregation and 1031 exchanges to pay $0 in capital gains. My team and I have helped them build massive wealth through real estate. I'm not a CPA, but I've learned from the best. Today, I'll share the same tax strategies they use to minimize their tax liability. By the end of this video, you'll know how to use these loopholes to keep more of your hard-earned money. You'll learn how to accelerate your wealth building and create a passive income stream that lasts. So, if you're ready to stop giving away your wealth to the IRS, let's get started. Most CPAs are great at filing, but filing isn't the same as planning. Your accountant is likely playing it safe. They're using the standard 27.5-year depreciation schedule because it's the default. It's easy. It's low risk for them. But here is the problem. Safe is expensive. While you're waiting decades to write off your property, you're bleeding cash flow today. You're paying taxes on income that should be staying in your pocket. Think about it. Every dollar you send to the IRS is a dollar that isn't buying your next property. It's a compounding disaster, and it gets worse when you go to sell. The standard way leads you straight into a massive capital gains tax hit. You've spent years building equity, only for the government to take a huge chunk of it the moment you exit. That's not investing. That's just working for the IRS. The high net worth players, the ones with 50, 100 doors, they aren't following the standard playbook. They aren't asking their CPA what the rules are. They're asking how to legally optimize them to maximize immediate cash flow. If you keep doing what your accountant suggests, you'll stay legal, but you'll stay far behind the pros. Here is the truth. Most CPAs are generalists. They know how to file your taxes, but they don't necessarily know how to build a real estate empire. They'll tell you to take the standard depreciation route. For residential property, that's 27.5 years. It's safe. It's slow. And for high earners, it's a waste of money. The wealthy don't wait 3 decades to get their tax breaks. They use accelerated strategies to move those deductions into the present. Let's start with the heavy hitter, cost segregation. Normally, the IRS views your rental as one big asset. But a building isn't just one thing. Your carpet doesn't last 27 years. Your appliances don't last 27 years. Cost segregation is the process of identifying and reclassifying these components into shorter recovery periods. Instead of a tiny slice of depreciation every year, you front-load it. This creates a massive paper loss. You still have the cash flow in your pocket, but on paper, you're losing money. That is how you legally pay zero taxes on your rental income. But what happens when you sell? This is where most investors panic because of capital gains tax. This is where you use the 1031 exchange. A 1031 exchange allows you to sell a property and reinvest the proceeds into a like-kind property without paying a dime in capital gains tax immediately. It's essentially a tax-free swap. Imagine selling a small duplex for a $100K profit. Normally, the government takes a huge chunk. With a 1031, you roll that entire $100K into a larger apartment complex. You've just increased your cash flow and your equity, and you've deferred the tax bill. High net worth investors do this for decades. They swap till they drop. By the time they pass the properties to their heirs, the heirs get a step up in basis. The capital gains tax. It effectively vanishes. Now, you can't do this with a basic spreadsheet. You need precision. This is why specialized real estate, accounting software, and expert tax planners are non-negotiable. If you're still using a generalist CPA, you're leaving 6 figures on the table. Now, here's the reality. Most CPAs are great at bookkeeping, but they aren't tax strategists. If you want these results, meaning tens of thousands in immediate tax savings, you need the right infrastructure. This is why I recommend the specialized accounting software linked below. It automates the tracking that makes cost segregation a breeze. But if your portfolio is already complex, software isn't enough. You need a specialist. I've partnered with a top-tier tax planning service that works specifically with high net worth investors. They find the leaks your current accountant is missing. The result: more cash flow, more properties, zero wasted capital. Stop leaving your wealth to chance. Click the links in the description to book a consultation or grab the portfolio management tools I use. Stop overpaying the IRS and start scaling your empire.